A warm welcome to you, my dear children. Welcome to Business and Accounting Studies. Again, we are meeting today in this session with the next chapter of Unit 3. Okay? In this session, children, you're going to learn about different types of business organizations. You remember how we divided business organizations? We divided business organizations according to three criterias. Three, right? What were the criterias? You tell me. What were the criterias? First, we divided classified businesses according to ownership, then objective or aim, then size or scale, correct? Now, we are going to discuss about those types of businesses separately, one by one. Okay? Starting with sole proprietorships. Sole proprietorships. You already know sole proprietorships, what these businesses are. The main feature is there's only one owner. The same person who invests his money and starts the business carries on the business by himself. That is sole proprietorships. I will give you another name. Surely this is sometimes a little hard to pronounce. So you can use this name, traderships. It doesn't matter. Same meaning. Sole proprietorships or sole traderships. Okay, let's go through the text. Businesses owned by an individual are known as sole proprietorships. Businesses owned by an individual. One individual. Okay, one person. Sole proprietorships. This is the most common type of business organization in almost all the countries in the world. This type of business organizations is common because it is easy to commence. This one too, I have told you. Everywhere you go, inside Colombo, outside Colombo, far away cities, far away regions, areas in the country, or in another country even. Most of the time, the most common businesses are these type of businesses. One owner businesses. It's easy to start and there's not much money needed. So people like to start easy, do what is easy. So when they start a business, they prefer to start a sole tradership. Okay? Right. Simple question. If your father is having a business, if your mother is having a business, brother, uncle, aunt, cousins, whoever, have you ever asked them, hey, what's the type of your business? How many owners are there? Hey, cuz, bro, what is your business? What is the type of your business? Are you the only owner? Ask, inquire about these businesses. Don't just go to the business and take the products that he or she sells. Ask him, ask her. Okay? If your father is running a business, you must know whether only father is there. I mean, whether the only owner is your father. Okay? Or whether he's having more partners with him. If he is having more partners with him, not a sole proprietorship. Okay, right. So this is the most common type of organization all over the world, children. Why? Why? Why all the countries? Why? Because they are very easy to start. Because it is easy to commence. Meaning of commence is to start. Easy to start. You must remember the example which I took in the last session. I took a very simple example. It was funny, but it was a real example. The example of Siripala. Yeah, the person who comes to pluck your coconuts in your garden. Or you have a coconut estate. He's coming to pluck coconuts. And he's buying your king coconuts. Why is he buying your king coconuts? The king coconuts which are in your garden, in your trees. He's buying them in order to sell. Okay, I told you that if he buys one king coconut for 30, he might sell for 50. So his profit is 20. Okay, he's buying for 30 and he's selling for 50, which means his profit is 20. Well, there are other expenses, of course. You're going to learn about these other expenses. His profit is not exactly 20, but just for the sake of this example, in this example, we'll say the profit is 20. Okay. Why was it so easy? Why was it so easy for him to do this king coconut business? Because he started a sole proprietorship. Not much legal barriers are there. Not much legal barriers. You can just go on and climb a tree, put some king coconuts down, buy the king coconuts, buy them for 30, load them onto a trishaw or load them onto a small buddy lorry and take it to the streets. Sell the king coconuts beside the street on the pavement. Okay. Nobody's going to come and ask, hey you, hey, where's your business registration certificate? No. Sometimes because he's doing a business on the pavement or on the pedestrian walk, that's what you call the pavement. The common word is pavement. Pavement, because he's on the pavement, he's blocking the pedestrians who are walking. Maybe those type of issues can occur and the police can come and ask him to, move out. Other than that, no other legal barriers. No other legal barriers. So very less legal barriers. So it is easy to start. That's why these businesses are so common. One owner. Nobody to come and poke their nose inside. Okay? Nobody is going to come and poke their fingers in Siripala's business. Because he's the only owner. He does what he wants. The way he wants. When he wants. All the decisions are his decisions. He's not gonna go and ask anybody, hey, Mr. Boss, shall I come today? Shall I go to this street to sell the king coconuts? No need. He doesn't have a boss. Siripala doesn't have a boss. Right? You get what I'm saying, right? His own decisions, independent decision making is independent. Okay? So with his commitment, with his hard work, he can make this business a success. Maybe hire another trishaw or a buddy lorry and cover a larger area. Contact more state coconut state owners and buy a larger bulk or more king coconuts at once, right? And he can employ one person. He can give a job to one person to work under him as a loader or unloader, a laborer. And he can expand his business, sell king coconuts in more places, more profits. So it's a profit-centered business organization, one owner, independent operations. Independent operations means carrying on the business by himself. Nobody to depend on. Okay, sole proprietorships. Here you go. Most common because it is easy to start. Requires only a small amount of capital. See, I told you that Siripala started the business with few thousands of rupees, right? Small amount of capital to invest. No need of big money. Easy to start. Only a small amount of capital and can take independent decisions. Remember, success of this business depends on the skills and dedication of the owner. He can commit himself, he can commit his time, Siripala, and develop his business. Okay, so success depends on the dedication of the owner. There you go, children. The first type of organization is one owner businesses, which are called sole traderships or sole proprietorships. Okay, characteristics. Let's read out the text. Characteristics. Following characteristics can be seen in sole proprietorships. Capital is provided by a single person who is the owner. We talked about that, didn't we? Capital is provided by a single owner or single person. He is the owner. Owner is required to find the necessary capital for the business individually. Savings or borrowed money can be invested as the capital. He can use his savings. He can go to his bank and withdraw money from his account. That is his money. No need to ask from anybody. If he doesn't have money, he can borrow from somebody. You know, Siripala is a innocent person. He doesn't have a bank account. So he can go to his father or his friend and ask for some money, a small loan. You know, can you lend me 2,000, please? I'll surely repay you in 1 week. He can, with the profit, he can repay. So the capital which is invested to start this king coconut business was borrowed from somebody by the owner. Or if you have money, you can use your money. Invest to your business. So capital is invested by one person, that is the owner. Profits or losses to be borne alone. Interesting. Borne. What is the meaning of borne? What is this word? Born. Bear. The meaning is bear. B-E-A-R, bear. Well, it doesn't mean, something like teddy bear. It means bear. You have to bear. That means you have to hold it by your own, on your own. Nobody is going to come and help you if your business is having a loss. Okay? Because you are the only person, only owner. Remember, you didn't want to let anybody join. You started the business alone. So you have to bear the losses. Profits too. If it is a profit, you're happy. If it is a loss, you're stressed. Both should be borne alone. Or in other words, the owner have to bear the profits and losses alone. Okay? All the profits earned by a sole proprietorship belong to the owner. Also, if there is a loss, owner should bear it alone. You get the money. If you get a profit, you get the money to keep. It's for you. You don't have to share it. Okay? All yours. If it is a profit. If it is a loss, all gone. That is also you have to bear alone. So second is that. Third is something that should be discussed. It's something that we should discuss. Unlimited liability. Dangerous affairs. Unlimited liability. What does this mean? Unlimited liability. Owner has a unlimited liability. It is unlimited. This must be explained properly. You must learn this properly. Get this to your heads at this point. Many exam questions have come from this. Not once, not twice, many times. Okay? Here you go. This is the explanation. Children. What is a liability? First of all, what is a liability? A liability is, let's say, is a loan. That is the easiest word that I can give you to remember. A loan. Or payable. Payable. Payable amount which you are owing. You are owing. In Sinhala we call nayai. Nayai. You are owing. A loan or a payable. A loan or a payable of the business. Payable amount of the business. I hope you can see my handwriting clearly. If you cannot see, just comment and let me know whether it's too small for you to see. It's a liability is a loan or a payable of the business. Okay? Owing. In Sinhala, we call Naya Vela. Owing. Owing of the business. Let's take that same example. Siripala's King Coconut business. Siripala did not have any money. He was an innocent, poor, helpless guy. But he's determined to start a business. And he decides to start a king coconut selling business. Buying and selling king coconuts. And he doesn't have money to buy king coconuts. Nobody's going to give him king coconuts for free. He should have money to buy king coconuts. That's why he went to his friend and took a loan. He said, can I borrow some money? Like 5,000. I'll pay it. I'll definitely pay it. Don't worry. Give me 2 weeks. I'm going to start a business and I'm going to earn money from the business and I'm going to pay you. Okay? And he borrowed 5,000. 5,000. Why did he borrow money? To invest in the business. So, that is a payable of the business. An amount that business should pay back. In this case, Siripala is the only owner. So, take this to your heads now. Take this to your heads. Siripala as the owner is bound by the business borrowings, or Siripala as the owner has the responsibility of paying the business liabilities or business loans or payables. He cannot escape from it. It is his liability. Business liability is his liability. If the business does not earn enough to pay that money, Siripala should pay it. Even by selling or sacrificing his own things. Like his food cycle maybe. Or maybe his phone. He should sell his phone and pay back that 5,000. That is called unlimited liability. Liabilities means loans or payables, owings, Naya. And the owner is unlimitedly bound by the business loans, bound with the liabilities of the business. He can't break away. He's bound. Legally, he's responsible. Important things, children, important, very, very important. A liability is this. It is a liability is a loan or a payable of the business, and owner is bound by the business liabilities. Okay, he has to pay back the money even by sacrificing, committing his own assets, own things, his personal things. Let's go through the text. In a sole proprietorship, the owner's liability is unlimited. Accordingly, the liability is not limited only for the capital that had been invested. In order to settle liabilities of the business, owner might require to use his properties external to the business, and there is no limit for such commitment. Siripala cannot say, "My friend, I borrowed 5,000 from you to start this business. I took your 5,000 and invested in this business. All right. And now the business is not running well. Nobody is on the streets. It's Corona season. Nobody is walking on the streets. Sancharana Sima, my friend. So my business was not a successful one. It just, it got bankrupt. I had to stop the business. Now that 5,000 is not there. I spent it for trishaw hires and to pay the rent of the buddy lorry. So I have nothing to do. Okay, the 5,000 was put into the business, and the business is gone. So I don't have a way to pay. I'm sorry." He can't say that. Siripala can't say that. Being the owner, he is bound by the business liability. He has to at least sell his phone or his food cycle or whatever he has, and he has to pay it back. End of story. That is called unlimited liability. I hope you got this, children. It's vital. It's very important. Most of the past papers has this question. Somewhere, maybe in the MCQ paper, maybe in the second paper. Okay? So that's that. And we have the fourth characteristic or feature of sole proprietorships, that is no legal personality. Again, something very important. How many very important things in this lesson? Well, there are many. No legal personality. Again, I'm going to put some markings to mark these things, because they are really important. Important. Very important. Let's take the fourth one. No legal personality. What is a personality? Do you have a personality? Do I have a personality? Well, I should look good, solid. I have a solid personality. Right. Just to show you my personality, if somebody asks me, "Sir, who are you?" I would say, "My name is Prabhat Ranasinghe. I'm a citizen of Sri Lanka." That's my personality. I mean, that's my individuality. Legally, I am a person in this country, a citizen of this country. I have a name. There are 20 million of them. More than that in this country. 20 million persons. Males or females, it doesn't matter. And when I say this, maybe you will not believe. Maybe you will believe, maybe not. Children, there are business organizations which are considered as legally, business organizations are considered as persons. There are types of business organizations which are considered as persons, individuals, people, not biologically a person like me or you, but the business is considered as a separate person. Not the owners of the person, the owners' personalities. They are different, they are separated. But the business is separately considered as a person. There are organizations, okay? You're going to learn about these organizations, special ones, special organizations. In this session, I can teach you. Interesting, very interesting. That feature is called legal personality. The business is considered as a person. Okay? But unfortunately, children, these organizations, sole proprietorships, do not have that feature. No legal personality. No legal personality. Right? A sole proprietorship cannot conduct any legal operations by its business name. Like this. Something like this. There are businesses which can enter into legal agreements by the business name. Let's say, okay, let's not take Siripal as an example. It is a very simple business organization, okay? Let's take a separate example. You start a juice bar, okay? You go to your father, you say, Dad, I want to start my own business. Or Tati, I want to start my own business. Can you provide me like 20,000, maybe 50,000 rupees? And he agrees. You take the money, you invest the money, you rent a building, small shop. You buy a stock of fruits and a blender and sugar and salt and stuff. And there you go. Your business is ready to go. You have papaya and mango and melon and sweet melon and wood apple and all the fruits that you need. And you have a blender. You just look for customers, put up a board, okay? When customers come, you ask them very friendlily, in a very friendly manner, oh, how are you, madam? How are you, sir? What would you like to have? And you make the juice. It's a business, sole proprietor business. The business name is, let's say, okay, let's say your name is Hiruna, okay? But you put another name, not your own name. You put a name like Tropical Juice, okay? Or Refreshing Juice. What do you like? Which name? Just for an example, let's say you put the name as Tropical Juice Bar. This is your name board, okay? Okay, there you go. This is your name board. Tropical Juice Bar. That is your name board. And you have this beautiful glass of fresh juice, whatever. Okay, and a glass of fresh juice is shown in your name board. Huh? The name is Tropical Juice Bar. Okay, right, so in this juice bar you sell fresh juice and you want to buy a small try show. Yeah, a try show in order to go to suppliers, fruit suppliers, fresh fruit suppliers, and bring the fruits to your juice bar, to your business. Okay, you need transportation, so you want to buy a try show, and you don't have the money, so you go to a bank and you take a loan, okay, or a leasing facility from a finance company. We learned about finance companies, remember, when we learned about business environments, the second lesson. Financial institutions, we learned as a stakeholder. Financial institutions, banks and financial institutions are stakeholders in internal environment or external environment. I'm just checking your memory. Tell me now if you can remember. Banks and financial institutions was in the internal environment or external environment? External, that's right, good. So you go to such a bank or finance company and you take a loan. Can you take the loan under the name of your business? Tropical Juice Bar. Can Tropical Juice Bar take a loan? No, because it's not a person. You are the person. You, Hiruna, you are the person. You have to take the loan under your name and you have to sign, because the business is not having a legal personality. The business cannot enter into agreements. Simple, okay? There are businesses that can enter into agreements, go to legal agreements, okay? They can buy, the business can buy lands, vehicles, go into legal agreements with other businesses when the business is having a legal personality. But here, nope, no legal personality. Sole proprietorship cannot conduct any legal operations by its business name, not by its business name. It can do so only by the personal name of the owner, name of your owner's name, Hiruna. You have to go and get the loan under your name. So you are the person who is getting the loan, not the business. By the personal name of the owner. For example, entering into contracts, purchase of vehicles. Voila. This is what I explained. Yeah. Entering into contracts, purchasing of vehicles, obtaining bank loans, filing cases should be done in the personal name of the owner, you. So now, something that will surprise you. Something that will surprise you. I'll let you see the board, the screen clearly. Children, because of this feature, because there is no legal personality, because of this feature only, the owner's liability becomes unlimited. Surprised? Because there is no legal personality, owner is bound to all the liabilities as the only person in the business. Business is not considered as a person. Owner has to bear all the liabilities and his liability is unlimited. Because there is no legal personality. There you go. Moving on. No continued existence. If the owner dies, business is finished. Death of owner, mentally unsound, mentally ill, or if the owner goes mad, if he goes crazy, business is finished. Okay? No continued existence. Not mandatory to register. This should be explained well. Not mandatory to register. This is the 6th or 5th. It is the 5th. Then this becomes the 6th. Okay? No continued existence, 5th one. Not mandatory to register. The business is not compulsory. The business name, it's not compulsory to register. Siripala's incident. Siripala is going from house to house and from street by street, or from one lane to the other lane. He walks and he plucks coconuts, king coconuts, and buys those king coconuts in order to sell. Okay, he's selling the king coconuts, by the side of the road. He doesn't have to register his business. Okay, but in the other example, when it's about your juice bar, you put up a board, name board. Then this must be registered. Must. It's compulsory. Compulsory to register this business, your juice bar. Why do I say that? Why? It says not mandatory to register. In general, it is not mandatory to register a sole proprietorship. Here in the textbook, it says it is not mandatory to register a sole proprietorship business. But now I'm saying that if you put up a name board, you should register the business name. Well, children, in law of our country, it says that if your business is conducted under your name, under your full name, owner's full name, no need to register. But if your business is conducted using a different name other than your name, like this, tropical, juice bar. The business name is not your name. Your name is not tropical, right? Your name is what was your name? I took your name for an example and it was Hiruna. Yeah, if your name is Hiruna, let's say Hiruna Vettasinghe, this is not your name. Then this must be registered. The business name must be registered. Okay. All right. Take that to your heads. Important point. If you put your own name as the business name, let's say Hiruna Vettasinghe Juice Bar, then no need to register. So that is about it. That is it about sole proprietorship, children. Sole proprietorships. Now we have to talk about advantages and disadvantages, and we are done. In addition to the above mentioned characteristics, there are some other characteristics of a sole proprietorship, such as ability to take decisions alone, controlling done by the owner, and owner has the opportunity to discontinue or stop the business anytime you want. Again, pictures that just showing small sole proprietorship businesses. One owner businesses. Done. Advantages, disadvantages. We'll finish this off. Finishing off with advantages and disadvantages. First advantage, very easy to start. No need to explain it again. You know that it is very easy to start. Profit belongs to the owner. Who else gets the profit? The owner gets the profit. All the profit that generated by the business is for me. I get the money. Yeah, most people like it, right? Most people like to keep all the money and not share it. So you get to do that. Okay, that's not a good thing. But in sole proprietorship businesses, you get to keep the profit alone. It's an advantage. Privacy of the business information is secured. You don't have to worry about your business information going out because you know all the business secrets. Yeah, secrets. And there is no other person who knows the secrets because you are the only owner. That's why you don't have to worry about business information. It's secured. Ability to use own skills at the best. You can give your best. You can commit your day, every day of your life, and develop the business. No need to ask anyone, no need to wait for anyone. You can do it by yourself. Hard work of the owner can develop the business. Good advantage. Independent decision making. Again, we talked about this several times. No need to ask anybody. You're working under nobody. You're your own boss. Be your own boss. No other bosses. So you can decide whatever you want, whenever you want, and do according to your own will. Independent decision making. Advantage. Disadvantages. Unlimited liability. Unlimited. So we should use red color. Unlimited liability. You know what is unlimited liability? Owner is bound by the business liabilities and he has to settle or he has to pay back even using his personal properties. Okay? Business liabilities become owner's liabilities. Big disadvantage, children. It's a big disadvantage. Okay. People have lost everything due to business liabilities. They had to pay using their own properties. Difficulties in raising capital. It's not raiding, it's raising. Difficulties in raising, again, capital. Well, if you notice any spelling mistakes or typing mistakes, comment below. Difficulties in raising capital. Okay, it's difficult to raise capital because you have your money only, just like the Siripala's case. If you don't have money, no capital for the business, no way to start. It's difficult, and even difficult to borrow from people because people don't like to lend money. These days, nobody likes to lend money. It depends. It's not very easy to find money. If you want to go and take a loan to start your business, you have to think about the unlimited liability again. So difficult to raise capital. No continued existence, no continuous existence, that is a disadvantage. If something happens to the owner, business is finished, gone. No legal personality. These two are connected. Individual decisions of the owner can go wrong. That is a disadvantage. Okay, so 5 advantages, 5 disadvantages. Mainly remember these 2. Unlimited liability, no legal personality. Remember, children, when I say important because exams, papers have given these areas a lot of importance. That's why I'm saying these areas are important. Okay, moving on. Now we are down to partnerships. Partnership businesses. Okay, what these businesses are, what features do they have, what things to learn about partnership businesses. Quickly go through the text. The relationship among persons conducting a business in common with an objective to earn a profit is known as a partnership. The relationship among persons, not 1, 2 or more, conducting a business in common, a group of people conducting a business in common with an objective to earn a profit is known as a partnership. So you have a kind of a definition here, right? Definition. And the definition is this: relationship among, let's take a line, relationship among persons conducting a business in common with an objective of earning profits. That is the definition. The Partnership Ordinance of 1890 affects partnerships. Professionals such as accountants, lawyers, tax officers, and doctors may also conduct their business as a partnership. Okay, now we are having a focus on some sort of a law. Partnership Ordinance of 1890. Children, there are laws, regulations, acts, parliament acts, and ordinances such as this, which affect businesses. Okay? There are laws and regulations and acts, parliament acts, and ordinances. In Sinhala, we call it Anapanat. Anapanat. There are acts and ordinances which affect businesses. In this case, Partnership Ordinance of 1890, this one affects partnership businesses. Okay? Partnership businesses. Remember, 1890, even before we got the independence, huh? We got the independence in when did we get the independence from the British? 1938? 1948, right? Yeah. So even before we got the independence, 1890, when the country was run as a colony of British Empire, when Sri Lanka was a colony of British Empire, when we were under the British, this law has been brought to govern partnership businesses. Okay, so obviously now you have an idea about the history of partnerships businesses. These businesses have been carried out since very early ages. Professionals such as accountants, lawyers, tax officers, they get together and they form a partnership business. Like two lawyers, they get together and they start a partnership business. Not to sell fruits or fresh juice. Lawyers, when two lawyers get together, they can, share their contacts and they can coordinate with each other and go and face the court cases and serve their clients, getting together and forming a partnership. Okay, a set of chartered accountants carrying out an audit firm. Chartered accountants carrying out an audit firm. Set of chartered accountants, that means getting together. Accountants, set of accountants getting together. Okay, that is a partnership business. Characteristics. Yeah. We have to talk about characteristics now. The following special characteristics can be seen in partnerships compared to other business organizations. Okay, first one, number of members in a partnership. Number of members. There should be at least two members. Minimum 2 members. Owners. And according to the Companies Act number 7 of 2007, maximum of 20 members. Owners, minimum 2, maximum 20. According to which act or law? According to Companies Act number 7 of 2007. another law, another act which is imposed on partnership businesses. And this law, this regulation is coming from Companies Act number 7 of 2007. Remember, in one of the past papers, I can remember there was a question, MCQ, multiple choice question, first paper. The question asked something like this: which law or act shows the number of partners in a partnership business? And in the 4 answers, this was there, okay, and this was there. This was also one answer. Partnership Ordinance 1890. And this was another answer. This was also there. Companies Act number 7 of 2007. Most of the children marked that answer. This one. Because this ordinance or this the regulation, the law is directly about partnerships now. So most of the children tick this. Wrong. Wrong. Answer is this. What is the law or the regulation which contains the number of members in a partnership, number of partners in a partnership business? Is it the Partnership Ordinance of 1890, or is it the Companies Act of number 7 of 2007? It is this. In a partnership, number of members, number of partners, owners are shown in this Companies Act number 7. So maximum 20, minimum 2. Okay, points to remember, children, points to remember. Number of members in a partnership. Then partnership agreement. Second feature, partnership agreement. A business, especially a partnership, where 2 or more people get together and start. This type of a business should have an agreement. It should not be like, it's not necessary to have a written agreement. It's not necessary to have a written agreement. Okay? It's not really necessary, but it's better to have a written agreement. Okay, can you see that? Okay. What I'm saying is, children, it is not necessary to have a written agreement. Okay? Agreement which is written, but it's better. It's better. You get what I'm saying, right? These are not really hard to understand. I'll tell you why. It's better to have a written agreement where the owners or the partners all together, where they sign where they sign and agree, a written agreement. It is better, but it's not necessary, not compulsory. Some sort of an agreement must be there. That's compulsory. It can be, it can be written, just like It's shown here. It can be written. It can be oral. Oral means verbal agreement. Or it can be implied by having, a sign conversation, body language. Or implied means like agreeing with each other without even talking. Oral means verbally agreeing. Written means in writing you agree with your partners. Okay, and all the conditions and terms and conditions about the partnership are written here in this document. This is better to have a written agreement, because it's better to have everything in writing, right? In writing. Okay, let's go through what it says. A partnership commences with an agreement among its partners. Yeah, of course. Which is known as the partnership agreement. This agreement can be in writing, oral or implied. So 3 ways of having an agreement. According to the Prevention of Fraud Ordinance. Oh, another law. Here comes another one. According to the Prevention of Fraud Ordinance, there's another ordinance. Prevention of Fraud Ordinance. If the initial capital of the partnership is greater than 1,000. What does that mean? If the initial capital which is put in by the partners, if it is more than 1,000 to start the business, partnership must have a written agreement. Well, you know what it says, you know what it means clearly, right? The Prevention of Fraud Ordinance, this law says, if the initial capital is greater than 1,000, more than 1,000, okay, 1,000 rupees, it must have a written agreement. It must have a written agreement. 1,000 rupees. Well, that's not much. That's not a big amount, right? If the amount is more than 1,000 to start the business, the partners get together and let's say one puts 500 and the other puts another 500. It's 1,000 rupees. If it is more than 1,000, the partnership business must have a written agreement. I'll tell you, children, what it means. It means, this law means that all the partnership businesses must have a written agreement, because very rarely you get a business which is started by several people with less than 1,000 rupees. Where do you get those type of businesses? Several people get together, start a partnership, and the capital which is invested is less than 1,000. It says, basically what it says is, this prevention of fraud ordinance, it says that every partnership should have a written agreement, but they have put it in this manner. If the capital is 1,000 blah blah blah, it must be conducted under a written agreement. Obviously, most of the businesses, like 99% of partnership businesses have a capital more than 1,000. This written agreement is known as the deed. There you go. That is something you must remember. The deed. The agreement is called the deed. Deed. Okay? Written agreement of a partnership is called the deed. Okay, right, let's go. Let's go forward. Again, unlimited liability of partners. This is the third feature, right? Can you remember how many features now we have already discussed? How many features? 1, 2, 3, 4, 5? No, only 2, right? 1, 2. Third one is this, unlimited liability. All the partners collectively, they must bear the liabilities of the business. Loans should be paid back even by sacrificing their personal properties. All the partners. Nobody can say, I didn't actually get involved in this business and you guys were the ones who actually actively did the business and the business is bankrupt now, so you pay the loan. No, I can't spend my money. No partner is allowed to do that. Every partner should bear the liability or should pay back. They are bound to pay back the liabilities of the business unlimitedly. Unlimited liability of partners. Partners are unlimitedly liable for the debts of the business. Okay, debts of the partnership. If the assets of the business are not sufficient, not enough to pay back the loans, debts, partners are liable to sacrifice their private properties to pay off the debts. Fourth, it's not mandatory to register. It's not compulsory that there's no law or there is no regulation saying that every partnership business must be registered. No. We discussed this earlier, right? Where is that juice bar? Here. Can you remember this juice bar? It's your juice bar, Hiruna. And you started the juice bar as a sole proprietorship, but you had to register. You must register. I said you must register because it's not your name. The business name is not your name. If the business name is Hiruna Vettasinga Juice, no need to register. But this business has a different name, Tropical Juice Bar. So it must be registered. As a sole proprietor, you must register the name of the business. Okay? Just like that. If the partnership business is not conducted by the names of the partners, it must be registered. If the business is having the names of the partners, no need to register. It's a little not practical, right? Let's say partnership business is started. 2 persons get together. One person's name is Kavishka Patirana. Other person is Hiruna Vettasinghe. They start a hardware shop. Okay, both are engineers. They get together and they start a construction company, construction business. Okay, who? Kavishka Pathirana and let's say Hiruna Vettasinghe. Okay, they start a partnership business. They start a partnership and a construction business because they both are engineers. Can you put the full names of the owners? Can you? Then you have to put the name as Kavishka Pathirana and Hiruna Vettasinghe Constructions. It's not really practical, right? So if likewise the names, all the names of the owners, partners are not used for the business name, then that must be registered. If a partnership is conducted under the full names of all the partners, just imagine if the partners have long names. It's not practical, right? It is not required to register if the partnership business has the full names of the partners. Partners' names is put on the as the business name. Not need to register. However, if a partnership is conducted under a different name, it should be registered. Okay, registered in the respective provincial council. If you are living in, let's say, Kurunagala, you should go to your local provincial council and register your business. So done. Unlimited liability, not mandatory, not compulsory to register, but you know how it is, right? You know how it is. I mean, why is it needed to register? Why is it needed to register? No separate legal personality, no separate legal identity. Same thing, okay? As sole proprietorships, even partnerships do not have a legal personality. That means the business is not considered as a person, separate person. Okay, if that business, the construction business, Kavishka Pathirana and Hiruna Vettasinghe Constructions, if that is the business, it doesn't have a legal personality. Kavishka and Hiruna, that type of like names, the owners, those are the only legal persons of the business. The business is not a separate legal person. Okay. Partnership is not considered as a legal person in front of law. Therefore, partnership is unable to perform any legal activities in its business name, under its business name, right? Now, partners are required to use their personal names in legal matters. Say if the construction business needs a lorry or a excavator or a backhoe, the business cannot purchase, business cannot take a loan under the business name. Either Kavishka or Hiruna, whoever the owners are, they should purchase. Again, same, no continued existence. If the partners die, if one of the partners go broke, if one of them go mad, business partnership will be broken, business will be stopped. All these features are common to sole traderships, sole traders, and partnerships. All these four are common to sole traders and partners. Unlimited liability, sole traders have unlimited Partnerships also have unlimited. Not mandatory to register, not compulsory to register, same. No separate legal identity, personality, no separate legal personality, same, right? Both businesses do not have legal personality, and both businesses do not have continued existence. There you go. We are done with partnerships. Now we are going to look at advantages and disadvantages. Okay, right. Things that we already know, things that we have already discussed. It's easy to start, even sole proprietorships, easy, even partnerships, easy. Not very hard, not very difficult. Not much legal barriers. Yeah, like we get more organizations, more business types of businesses, which has a lot of barriers, a lot of legal barriers. But for sole proprietorships and partnership businesses, not much legal barriers. Easy to start. Can raise more capital. Can you remember? This was a disadvantage in sole proprietorship businesses. Only one owner was there. So only that owner have to find the money, find the capital. Only that owner is there. But here, I mean, in sole proprietorship, that was a disadvantage. Okay. Here in partnerships, that is an advantage, because more partners, more owners can invest more capital, can raise more capital, can utilize different skills of partners. More people means more skills, more contacts. If I start a business to, let's say I started that tropical juice bar with another friend of mine. Both of us got together, started the business as a partnership. Then I can use my contacts, all my students would come. All my students would come to my juice bar, and all my friends, my partners, friends, his contacts also could come, and I could use my skills, my communication skills, my attractive way of talking, and customer service, friendliness, and everything I can use in the juice bar. And my friend, my partner, he can use his skills, his management skills, so on and so forth. Different skills of partners can be used. Okay, shared liability. Sole proprietor must bear all the liabilities of the business alone. But partners in this business can share, they can share the liabilities of the business. I know that these things we have already talked about these things. These are simple things, clear, right? Liabilities, you know what liabilities are? Loans or payables. If the business is wrapped up, wind up the business because it's not successful, all the partners can get together and put in money and settle the loans of the business. Shared liability. Collective decisions. Everybody can put in their ideas and can take a good decision. Not like a sole proprietor. He takes his decisions, maybe they are successful, maybe they are not. Maybe the business will, have a benefit from a decision, but from the other decision, the business will be affected badly. Just think, if the sole trader, the proprietor, the one owner, if he takes a decision in anger, with feeling upset about something, that decision could ruin the business. But here, partners, you can't take your own decision. Like one person, one partner cannot take his own decisions. He should consult others. Then, most of the time, the decisions are good, better. That's an advantage. Finally, we talk about disadvantages. Unlimited liability, we know that. Profit should be shared. Nobody likes to, share the money. You want to keep it all. But you can't do it here. You have to share the profits with your partners. That is a disadvantage. Conflicts can occur. Clashes, fights. One person says, the juice bar should be black and blue. And the other person says, no, that is not a good color for a juice bar. We will paint it orange and purple. Clashes could occur. Conflicts among partners. That is a disadvantage. No continued existence. If a partner dies or goes mad or goes abroad, business should be winded up. Business should be ended. No continued existence. No legal personality. Again, the two main features of even in sole proprietorships, they were here. Even in partnerships, these two are here. Okay. All right. With that, children, we wind up today's session. We talked about sole proprietorships and partnership businesses, features of sole proprietorships and features of partnerships, disadvantages and advantages of partnerships. Okay, the next we have is this organization. This is incorporated companies. The complex, the more larger, the more legally beneficial, big organizations, larger organizations when compared to sole proprietorships and partnerships. It'll be interesting. I hope to see you soon. I hope you'll join with me in the next session. Thank you very much.